Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for the evening of Monday, and we're now at the 30th of June, 2025. Next we talk will be July. Wow, hard to believe it's here. As you can see, the gold up $14, silver getting a little bit of a rebound, same in the copper, and the platinum market taking off to the upside. Most of the stock indices are down in early evening trade, as you can see. Energy market still under some pressure. You broke so much in nat gas, this might be an area where it gets a little bit of a bid. The market that came back is the Canadian dollar, as you saw that the trade threats between the U.S. and Canada over the digital tax that Canada said on Friday they were going to enact. As of yesterday, it didn't happen. They pulled the tax before that could happen yesterday, and we didn't get one. So the market came roaring back, and now the question is, what is President Trump going to do, and to who is he going to do it as these trade talks keep going on? Scott Bessent was on this morning on Bloomberg talking about this, and he still says there's 10 deals that he expects to be done very shortly, but we've heard that from him. So far, none are done. We only know the UK. Everything else are still maybe letters of intent that will come about. And what about all the other countries that we do business with that aren't in those 10 that they're waiting for 10 more deals? I have to think they're going to get letters they may not like, between 11 to maybe over 25% tariffs. We'll see where that goes. Yeah, another thing that we have coming on right now is a lot of data tomorrow. You're going to get the Red Book Group. They're going to update their weekly U.S. retail sales data. Then we're going to get the S&P Global Group coming out with their final June manufacturing sector manager PMI. That comes out at 8:45. The ISM will release their U.S. June manufacturing sector index, and that comes out at 9. Construction spending for May. This is very backward looking. That's always, when you think about it, minimum 30 days back. That will come out at 9 o'clock. Job openings, the JOLTS report, that's going to be where everybody looks. They want to see what's going on. The last month's report estimated the job openings at 7.391 million. So the question is the over-under. If you come under at 7.2, 7.1, what's that impact? What happens if you come in at 7.4 or higher? What does the Fed think of that? Those are the things you've got to be looking at. And the API numbers will come out at 3:30 in the afternoon tomorrow. So it's a shortened trade week. It ends up with Friday being, as you know, the jobs report data. Right now in the Senate, everybody's getting their minute of fame as they can bring up any amendment they want. They can say, hey, my wife's going to make this lemonade for us tonight. Can we get this in the bill? We'll vote that down. It can be anything by anybody. I know it sounds crazy, but that's what they're doing. And it'll be, who knows when they'll be done. The thing we have going for us is there's the July 4th holiday. Do these senators want to go home? I've already heard that if they can get done early, they're prepared to call the House into session to do a vote to get this done by July 4th. I have a feeling you're just going to see them trying to not get anything done for hours at a time. We'd love to wake up in the morning and find out what the Senate bill is. That is not the final bill. You do understand that. Then you've got to get into the reconciliation between the two houses. This is just the Senate version. Can we make July 4th? It's looking very iffy to me. The president's in town, putting pressure on everybody. J.D. Vance will be there if he has to cast a tiebreaker vote, because you lose another Republican or two in the Senate, you got a real problem, and you can. I mean, as they're attaching these amendments, you're going to get people that are in, they're suddenly out. Maybe you bring more in. It's a big gamble. All right. So as we come back to the market, let's take a look at some of the charts and get a feel for what we have. In the gold, the market is still staying above on a weekly basis the 18-week moving average of closes. So with everything that has gone on, the market is now, for the week, up 1.44%. And you're staying over that 18-week average. That is still bullish overall. When we come to the daily chart, you can see how the market's been in a corrective mode. In the pattern, you've had a pattern of lower highs, lower lows. You had an attempt, and I'll show you this right over here, in an outside day up, right here. And if you take out the low of an outside day up, if you've taken my charting course, you know it portrays that the market, it makes it that the market should be going down for key numbers. Now, what are those numbers? Well, one of the numbers could have been the 3203 level, which is the 100-day moving average. The other would be a Bollinger Band. Kaboom. You got to the Bollinger Band. So that's what happened when you took that out. You were literally right there, though, when it really happened. So I can't say, oh, it's a big surprise. But it's the closest of one of those numbers. You did it. Now, even if you got a big rally here and you closed over 33.65, which would be $40 higher than where you're at. I say that number because that's the 18-day average of closes. All you would do is neutralize the bearish trend that's in place. What about momentum? Too oversold, in my opinion, for traders to be adding new money, especially into a Bollinger Band, where you only stay under that number or over it 5% of the time. What the market does have going for it is it's got a lot of sideways action. And from sideways action can come bigger plays in the market. When we go to the gold-silver ratio, it is continuing to do what I thought it would do when I did my special silver report, and that is that it is gaining on the gold market. Now, the silver market also got hit, and today made its challenge of the lower Bollinger Band. You can see you made your run towards it. You missed it by 11 cents. That's not the same as hitting it, but it did not have an outside day up. What it's instead doing is compressing the Bollinger Bands and making them pull in as the market's probably going to spin around that 18-day average for a while as it looks over its shoulder at the tariffs, the trade bills that are going on, and get an idea what's going to happen from there. The copper market is a play that has to do much more with the fact that China's PMI looked pretty good. In other words, they're old factory gate orders. The factories are pumping, and I write tonight and give you the idea of what the ports in China, the amount of shipments that came out of them ever since Trump and Xi got together and tried to make a quasi-deal. I don't know how good the deal is working for both sides yet, but we're not at least every day fighting with the Chinese. The question is, are they releasing the rare earths? All the reports last week was no. They're still holding them up. What they do release is very frugal. But what you can see here is something different. And this is because so many people wanted to get copper into the United States before tariffs could hit on it. We don't know if copper is really going to be tariffed yet. We know aluminum and steel are the two products that we keep hearing about. But what that did is you took certified copper out of the London Metal Exchange, you shipped it to the United States, you ended up with less copper there, and this does look at that. Now, the spreads have been everywhere. You were last week up to $98 over the spot, and then you fell back to $6. But you're staying over it, and that's what squeeze plays do. You pay what you do to get out. Some of these people have very short-lived contracts, and they've got to buy their way out of them if they can't get the copper. In the platinum market, we still have a pattern of higher lows. You can see that the market's still at work there. Now, if you start taking out 30, what would that be? 1333, then I would get nervous that you want to pull back to the 18-day average. I'm already in that nervous camp. When a market loses a bullish embedded reading, which it did, you take a look right there, you had a 78 reading. Anything under 79, the way I teach it, that's it. Unless it goes back up for this high, the odds favor price and the 18-day average are going to make a run at each other. This was the market today, and this is where you're at right now. So it hasn't done it yet, but it also hasn't made the new high. I certainly would not be telling clients to be a buyer here because of that. Make it prove itself that it can go up. I don't see that. The odds percentage is down. In the dollar index, you've got the Gorilla Glue trade at work. That is when every single day you're hitting the Bollinger Band. You could be above it or below it. You're not getting a real pattern, but you're just sticking to it. And what that does is it forces the market, most of the time, to first get oversold. Then the question is, can it embed where the blue and the red are going sideways under 20 for several sessions or more? You're not there. You're just in an oversold condition, but it's not letting up. And as I said, I thought you could make a big run in this market. The 90 level is still in contention. I heard a number of analysts today coming on as to why they think the second part of this year will be stronger for the dollar. Maybe they're right. I'm a chartist. In order to take this pressure off, you've got to get back over the highs of Friday. That would at least maybe alleviate some of the pressure. But if you get this number to close under 20, you got to prove you can stay there for several sessions. You're not there yet. So you put it together, you come up with game plans, and you execute. And that is the hardest thing for most people. How do they execute? Why are they executing? Where are they executing? We discuss that and so much more in our free offers. We have trading kits to work with you. For those of you that are more experienced, we have courses that you may not have seen that are right there that teach this. We have access to our price counts so you can see what they are. You've not seen this in other places. Think of it as Fibonacci swing lines on steroids, a whole different way of trying to figure out once a trend sets in, where might that go and why, and what are the percentages, and how does that work out on the charts. And this, we apply it to both daily, weekly charts. You can apply it to any type of chart that you wish. So I think you'll find that to be fascinating. That's in our QT software where you can also try that out. So just go to iraepstein.com, free offers. That's where you sign up for this. We typically get this out within 2 days via email, so you can get it all for yourself working. I'm Ira. You have yourself a great evening. Watch our other videos, and I'll catch up with you all come the morning in our morning flash update. Take care.